Hello everyone, my name is Austin Wiley and I'll be presenting on the Adelphia accounting scandal. I've titled my presentation Fail Adelphia, the Adelphia accounting scandal of 2002. So we'll go ahead and get started. So just some basic background information on the company. Adelphia was a cable TV company founded in 1952 by John Regas. Regas became the CEO and he founded Adelphia in Coudersport, Pennsylvania, and that became their headquarters. One of the more interesting things about Adelphia is that they were the fifth largest cable company in the United States before the scandal occurred. So they were doing very well as a cable TV provider here in the U.S. and unfortunately, this scandal was their downfall. So just a rundown of who was involved in this scandal. CEO John Regas, who I just introduced, he was the main perpetrator here in this scandal. He also had two sons involved in this scandal, Timothy Regas and Michael Regas. And Michael Mulcahy, who at the time was the treasurer of the company, was involved as well. And in these next few slides, I'll get into how they committed the fraud and the penalties that were associated. So how this fraud occurred, CEO John Regas, his sons, and Michael Mulcahy hid $2.3 billion in debt off the financial statements. And they were able to do this through inflating capital and inflating expenses. Now, deceiving investors through this hiding of debt was basically the main form of fraud that occurred in this scandal. However, these four perpetrators were also accused of using these complex cash management schemes in order to spread money around to various family-owned entities that were outside of the company. So through these schemes, they were able to basically steal about $100 million and use it for themselves. And I'll get into that on the next slide here. So CEO John Regas, through those cash management schemes, was able to spend company money on personal luxury items. Now, through my research, I was able to find 3 different instances of personal spending. The first one was that he purchased 2 Christmas trees and flew them out to his daughter in New York, and that cost the company about $6,000. The next instance I was able to find was it was determined that he purchased at least 17 different cars with company money. And finally, and in my opinion, the most outrageous personal spending was that he purchased 3,600 acres of land outside of his home in Pennsylvania in order to preserve his pristine home view that he had there at his house, and that cost the company $26 million. So I know we always talk about personal spending and extravagant lifestyles in these fraud cases, and this is a perfect example of that in the real world. So the outcome for these perpetrators is as follows. CEO John Regas and his son Timothy Regas were convicted of 3 different types of fraud, those including conspiracy, bank fraud, and securities fraud. Now, at the time of the conviction, both were sentenced to time in prison. CEO John Regas, who was 80 years old at the time, was sentenced to 15 years in prison, and his son Timothy was sentenced to 20 years. Now, his other son Michael Regas and the treasurer Michael Mulcahy were acquitted of all charges, and the overall monetary penalty that was assessed in this fraud scandal was a $1.5 billion settlement agreed upon by the Regises. So CEO John Regis and his family had to pay $1.5 billion. As far as the company, Adelphia unfortunately had to file for bankruptcy, and obviously they now no longer serve as a cable TV provider here in the States. They now operate under bankruptcy protection, and they've had to move their headquarters to Greenwood Village, Colorado. They've also had to scale down to 275 employees. They still exist today as a corporate entity, but they really only exist to settle financial obligations and some litigation claims that still exist. So just to wrap up the scandal here, CEO John Regis and his sons stole more than $100 million from the company. More importantly, they hid over $2.3 billion in debt off the financial statements, and this led to time in prison, sentenced to the CEO and one of his sons. And then monetarily, the Regis family was forced to pay a $1.5 billion settlement because of this scandal. And overall, Adelphia was forced into bankruptcy, and now they no longer exist as a cable TV provider here in the United States. So here's just a list of the references I used for information on this scandal. I want to say thank you to everybody for your time, and I hope you learned something new today. Thanks a lot.